Good morning everyone. 27th January stock market news along with IDFC First Bank result and its target. Welcome to MoneyGuide. Stock market has seen a large volatility trend in the past few trading sessions, swinging between the gains and losses. Dalal Street is getting ready for another week of trading with several global and domestic factors expected to influence investor sentiment. The week will begin with China's NBS Composite PMI for January on Monday, which will provide insights into the health of China's manufacturing and non-manufacturing sectors. On Tuesday, the US durable goods orders for December will indicate consumer spending patterns. Japan's Consumer Confidence Index for January is scheduled to be released on Wednesday, offering a glimpse into consumer sentiment in the country. The US Federal Reserve will announce its interest rate decision on Thursday, January 30, which is widely expected to remain at 4.5%. Alongside this is US GDP growth rate for the fourth quarter, forecasted at 3.1%, will provide a clearer picture of the country's economic performance. On Friday, January 31st, the US Core PCE Price Index for December, a measure of consumer price changes, will be released, along with the UK Nationwide Housing Price Index, which reflects trends in UK house prices. Both the Nifty and Sensex breached key psychological levels of 23,000 and 76,000 respectively before recovering slightly. Despite the modest recovery, the indices ended the week with losses of approximately 0.50%. All major indices are now trading below their crucial 200 EMA in one-day time frame, underscoring sustained bearish momentum. Corporate earnings have added to the market's volatility, which lacked luster. Third quarter results from some of the largest companies failing to provide the boost investors have hoped for. FII were net sellers of rupees 76,941.9 crore in the cash segment on 24 January 2025, where DII were net buyers of rupees 76,209.7 crore in the cash segment on 24 January 2025. Net value for FII is 2758.49 crore, for DII is 2402.31 crore. Alternative asset classes such as Bitcoin and gold reached record highs last week, drawing attention and funds away from equities. On the positive note, crude oil prices declined and the Indian rupee strengthened slightly, offering some support to investor sentiment. Our Indian rupee traded as on 26 January 2025 is 86.172920. Here are the Nifty and Bank Nifty's crucial levels for the coming days. Nifty has strong support level at 22,700 in 1 week time frame. If it breaks the level, then the next support level is 21,300. For Bank Nifty, there is a strong support at 48,200 levels. And as per chart analysis, it's showing a strong upside momentum for the levels of 51,300 in coming days. Next is quarter 3 result of IDFC First Bank. Bank announced quarter 3 financial year 25 earnings on January 25 Saturday, reporting a sharp drop of 53% in standalone net profit to rupees 339 crore, dragged by increased provisions due to higher loan slippages compared to rupees 715.7 crore in the corresponding period last year. And bank net interest income, the difference between interest earned and paid, rose 14.4% to rupees 4902 crore compared to rupees 4286.6 crore in the year ago period. And this is the statement given by Vaidyanathan, MD and CEO of IDFC First. As per technical analysis, entry should be taken only after 64. If 1 hour candle closes above 64, we can take an entry for the first target of 75 and second target is 84 rupees. Stop loss will be 59 rupees. Nifty and Bank Nifty intraday levels. If Nifty opens in gap up and breaks 23,100, first target is 23,200, second target is 23,270. If opens in gap down and breaks 2370, first target is 23,030, second target is 23,000. And if Bank Nifty opens in gap up and breaks 48,390, first target is 48,540, second target is 48,850. If opens in gap down and breaks 48,300, first target is 48,110, second target is 47,900. Between 48,390, 48,300, no trade zone. Do you feel the information provided in this video is helpful? Please like, share and subscribe to my channel. Keep learning, keep earning. Thank you.